Okay, so very beginnings. I mean, why invest in a stock market? Okay, a lot of people do invest in the stock market. It seems like very basic question, but let us say if somebody, it could be your family member, or it could be your friend, tells you, hey, I know, my friend Murthy, he lost like a lot of money. Stock market is just like a gambling, it is just like a casino. Don't invest in it. When somebody really corners you, you need to have an answer. So basically you need to have a voice or an answer so that you know why you're investing. I mean, whenever you do something, you really have to have I believe you really have to have a strong footing why you're doing this, right? If you cannot answer even the skeptics. I know 80% of the people say, yeah, it's good. But there will be 20% of the people, they're going to tell you it's like a casino gambling. So we still have to account their opinion because they are not stupid. I mean, they are not stupid. They have reasons to believe that it's a casino. They have reasons to believe that people lose money. They have reasons to believe people actually lost money. I mean, the person, they know. Let's say they lost like 100K in the retirement account. That's like real money. They lost 100K. I mean, where will he get it from, right? He lost the money. So I think, it's very important as investors to understand why we invest in a stock market. So I think it's important to answer this question also, just so that it could be your wife telling you that, you're just being crazy, somebody tells you, somebody's investing, somebody's making money, they are smart, you're not smart, so you shouldn't be investing, okay? It could be that, or it could be some friend telling you that, you're an idiot, you have to know a lot more financial metrics and this and that. It's not like, it's not for normal people. People tell you like all kinds of things. I mean, there are people out there, and they are not wrong because people lost money and people lost the entire retirement account sometimes. So we have to recognize that fact before we start investing, okay? So to answer that question objectively, okay, why invest in stock market? Okay, to answer that, okay, as a bullet point, 1, 2, 3, okay? So that's what, okay, let's look at what are the investment options available for us right now, right? So that is the basic thing. Okay, so if you're telling me that I should not invest in stock market, okay, what are the other options I have? And are they better, right? So that's what I'm trying to do. That's what I'm going to try to go through that. So let's say, what are the investment options we have? We have a savings account, or a money market accounts, whatever you want to call it. It's basically interest rate is, this is very easy to say, yeah, no, but I'll tell you, interest rate is very low, 0.5% average. If you really get lucky, maybe 1.5%. Okay, like but then you have to lock your money for 5 years, things like that. And then there are CDs, right? That CDs is basically, it's a certain period. It's like in India it's called something else. Fixed deposits, yeah. So it's very similar to fixed deposit. So you are basically saying, I'm going to keep this money for this long to get this interest rate. So that's again, you won't get more than like 2-3%, at the best 4% maybe. And 4% is like a stretch. I would say like 2-3% is what you generally get. And money is locked down. Important part. Money is locked out for 2 years. If you try to withdraw the money before 2 years, you will get penalties, and you have to pay the initiation fee, and when you take it out, you got to pay the penalties. Okay, the next 2 options are kind of tricky, but I'm going to still try to compare them. Real estate and gold. Okay. So savings account, CDs, it's all understood, right? They are safe. Definitely they are safe. So you definitely get whatever they tell you you're going to get. Let's say 0.5%, 1%, you're for sure going to get 1%. Right? You're for sure going to get 0.5%. So there is a certainty to it. That is why they are low. Got it? They are certainty to it. So I'm sure like, okay, I have $1, I'm going to make $1.10. Not 10 cents, it's 10%, but no. $1.01 by end of the year. So I have a certainty. So that's why people still pay into that. But that is not an investment. That is just basically hiding your money, not losing money. Okay? So then the next option comes to like most of us are Indian, so I think we can say that all of our Indian guys, we really like real estate and gold. And for very good reasons. Okay? In India, it probably makes sense to invest in real estate. Okay? But maybe not, no, that's a different story. But generally in India, because the inflation is so high, okay, and there is a lot of liquidable market, in the sense that there is so many people are interested in buying real estate. Okay, when compared to here. Right, here if you say like, if you take like 100 people, you probably have like 2% interest. Whereas in India, you probably can see like at least 40% of the people are interested in real estate. Okay, so I think this is the, okay, before we go on forward, this is like a savings bank account, maximum percentage I took. So this is a savings bank account one. This is like for the CDs, I believe. You can see that it's like 2.3, 2.25%. So just slides to show. So real estate versus